YouTubers, Mike Martins here. Mike Martins channel. Better Dwelling. Better Dwelling's got another article following the Better Dwelling articles. Remember, like when somebody commented in the comment section, I'm like a little doggy when Better Dwelling puts up an article, rings its keys, and I come running to read the article. Let's see what's going on here. Greater Toronto is seeing new mortgages drop wicked fast. If the adage, the new real estate prices follow credit growth is true, Toronto may be in for a rough ride. Using Bank of Canada data to estimate dollar volumes, we will see less mortgages are being issued in Greater Toronto. The decline is exclusive to traditional lenders as more buyers turn to subprime loans. So subprime loans, you need to eat. People need to eat. So they've been living off their homes like ATM machines because obviously they don't make enough money to cover their nut. So when will the party, or when will it come to an end? Let's see here. The dollar value of mortgages dropped over 25%. The total dollar value of mortgage originations in Greater Toronto is plummeting as sales decline. Just over $26.55 billion in mortgages were issued in the first quarter of 2018, a decline of 0.47% from the previous quarter. The first quarter of 2018 is also down a massive 25.3% compared to the last quarter last year. The dollar volume declines is roughly in line with the drop in sales. Roughly in line with the drop in sales. Sorry. Greater Toronto new mortgage dollar volume. Here it is, people. In millions. It's going to go back to probably 2009 Q1 prices pretty soon. Traditional lenders see originations drop over 27 points. The decline of originations were concentrated at banks and other traditional lenders. This segment of the market saw $24.46 billion in originations. I hope I'm reading that right. In Q1 2018, a 0.8% decline from the quarter before. The first quarter of 2018 finished 27.01% lower than the same quarter last year. If you do the math, if you are a math whiz, you've already noticed that the decline was larger than the total decline. Oh yeah, that's because traditional lenders are losing market share to private lenders. That's correct. Greater Toronto mortgages to traditional lenders going down, baby, going down. Dollar volume. Oh, what was this one again? New mortgage dollar volume. Sorry, I thought that was to private lenders, to traditional lenders. And this should be is this private lenders? No, it's not. Traditional lenders are losing market to private lenders. Traditional lenders have lost the majority of originations, but their position is slipping. Traditional lenders issued 92.13% of mortgage dollar volumes in Q1 in 2018 compared to 92.43% in the previous quarter. The slight loss brings the total market share down by nearly 2 points since last year. Guys, 2 points is a lot when you're going into billions of dollars. It's a lot of money, man. The market share loss is being picked up by private lenders with steep mortgage rates. Guys, I keep talking about this to be really careful getting into this because a lot of people getting into Canada is a subprime real estate problem. You just don't know it. So guys, people are paying their bills right now and people are up to par right now with their bills because they're going to the subprime mortgages, which is very, very dangerous. Greater Toronto mortgage market share at traditional mortgage lenders. Look at that, people. Doesn't lie. The graphs don't lie. The industry is attributing the decline in the market share to B20 guidelines. The guideline forces OSFI regulated banks to stress test buying started in 2018, ensuring borrowers can pay higher rates. Private lenders are not OSFI regulated, and therefore they don't have to stress test buyers. Naturally, so guys, watch out. You're not, you think you're getting ahead by getting the money somewhere else. Sometimes most of the time when the bank turns you down, it's because they're actually helping you. They really are. Naturally, all industries is assuming buyers are trying to dodge stress assets. It's a cute narrative, but it doesn't really make sense. Traditionally, lenders have been losing market share since before the B20 guidelines were mandatory. Most likely, less sophisticated money that could qualify at traditional lenders began to pour in the market. Wow! What is happening, people? Less mortgages are going out. People are going to the private mortgage sector. Let's see what this has to say. Canada has subprime real estate problem. You just don't know it. A few weeks ago, the real estate agent told me about his client, relatively wealthy, older dude, closed on one but two townhomes. He plans on flipping after some questions regarding who financed such a deal. He explained it was a private lender right before adding, "Don't worry, it's not like in the US. This guy has good credit. He just couldn't get enough money from his bank." Whew. I realized that people aren't lying when they say Canadian real estate is nothing like in the US in 2006. Canadians just don't understand what happened during the US subprime crisis. They also don't really understand the subprime lending is alive and well in Canada. We just use different names. Subprime versus subprime loans. So it goes into that. Then subprime lending, private lenders and interest rates. And then Canada subprime market. And don't forget the shadow lending, guys. Canadian mortgages held by private lenders. It's going up. Look at that. Woo! Subprime goes to Toronto condo market. Look at that. Look at the numbers. Woof. The government doesn't track subprime borrowing. Guys, pay attention! The government doesn't track subprime borrowing, but the signs are there. Many middle-class speculators are broke-ass buyers are going to private lenders. Many of these buyers likely think they're the only people doing this. The market appears healthy because not a lot of these people understand that a lot of these people are doing this. As rates rise, price growth tapers, and sales decline, this becomes what equity traders call a crowded trade. I actually heard of that before. If you're unclear what crowded trade is, there was this thing called US subprime credit crisis. It's pretty similar to what's happening right now. And then somebody quote says, bad loans happen to good credit. You better believe it. Once the party runs out and you stop going to parties, when people stop going to the big housing discussion gurus, they used to go to these parties and they used to talk about all these properties they own. They won't be attending this year's summer parties and barbecues, ladies and gentlemen, because they are, don't want to talk about it anymore. If you have any major power or people that bought and that were talking you down because you didn't buy. Anyways, and if you didn't buy, God bless you. Thanks for watching, guys. What is happening in Toronto? I was just there a week and a half ago, 2 weeks ago, and the traffic, the congestion, oh my God, watch my video on traffic, Toronto versus Vancouver. Thanks for watching, guys. Don't forget to hit the subscribe button.